It's Thursday, the 1st of April 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. In today's headlines, the big banks and Telstra led the share market higher during the March quarter, and the tech stocks tanked. Plus, home prices and building approvals soar in further signs of strength in the economy. The federal and state governments get into a brawl over the vaccine rollout, and details of the biggest IPO of the year are finally released. Our lead story today, banks, telecommunication companies and discretionary stocks such as retailers led the local share market higher for the first quarter of the year as the economic recovery in Australia hit top gear. Westpac and ANZ led the way, with both banks' share prices up more than 25% since 1 January as investors bought into the economic recovery story. National Australia Bank was up 16% during the quarter, while the previously maligned Telstra has risen 15%. Woodside Petroleum has benefited as oil prices rose 25% during the period, and Newcrest Mining has suffered as the price of gold fell more than 10%. The tech stocks have had a horror start to the year, reflecting the switch away from pandemic-related stocks. Buy Now Pay Later group Afterpay and cloud accounting software company Xero have both fallen 15% so far in 2021. And the three big miners have been mixed as iron ore prices soared and then fell. BHP is up 8% for the quarter, Rio is down 2%, and Fortescue Metals is off 13%. Overall, the S&P/ASX 200 rose 3.1% during the quarter to finish at 6,791 points. It really was quite the quarter inside and outside financial markets. There was an armed insurrection in Washington, D.C. as the presidency transitioned from Donald Trump to Joe Biden, followed by a $1.9 trillion rescue package. Bitcoin hit a record high, bond yields soared, and local interest rates stayed at record lows as the Reserve Bank declared it wouldn't be lifting the official cash rate for another 3 years. And the Morrison government went from being hot favourites for the next election to being neck and neck with the opposition. What a quarter. In overseas news, the White House has released some details of President Joe Biden's massive spending package due out later today. It would include $2 trillion in spending on infrastructure, paid for by higher corporate taxes. The White House said it will be the biggest public investment program since the creation of the interstate highway system and the space race of the 1960s. Pfizer and BioNTech said their vaccine was safe and effective for 12 to 15-year-olds, with 100% efficacy in the prevention of symptomatic COVID-19. And it was an almost April Fool's joke that went wrong. Volkswagen of America released a statement saying it would change its brand name to Volkswagen, V-O-L-T-S wagon, to emphasise its commitment to electric vehicles. But it wasn't true, and regulators were not amused. An intentionally fake news release is highly unusual for a major public company, and not a good idea, though I am talking about it, so maybe it worked. Locally, Sydney home prices jumped more than 3% during March, the fastest rise in 33 years, according to CoreLogic. Melbourne and Brisbane prices last month were up more than 2%, while Perth homes were 1.7% higher and Adelaide homes were up 1.4%. I'm starting to sound like a broken record, but the housing market is hot, and it's across the whole market, not just the regions. The question is whether it's sustainable. Building approvals surged by nearly 22% in February, following a 19% dip the previous month. The result was far above expectations, and house approvals are now up 58% over a year ago, while unit approvals are 49% higher. Much of the demand for new houses has come from the government's home builder cash incentive, which ends in 2 weeks' time. Low interest rates, of course, have also spurred the rise. The blame game around the vaccine rollout is heating up, with both the New South Wales and Queensland governments taking aim at the federal government over a lack of transparency around the low number of jabs provided so far. The federal government is responsible for the rollout, and yesterday said 72,000 vaccinations were given in a 24-hour period, a record, but the target of 4 million jabs by May 10 is unlikely to be hit. Meanwhile, there were just 2 new community-transmitted cases in Brisbane yesterday and 1 in northern New South Wales, all from the Princess Alexandra Hospital cluster. The Byron Bay Blues Festival, which had sold 15,000 tickets, was cancelled on fears it may become a super spreader event. Regional airline Rex flew its inaugural Adelaide to Melbourne flight yesterday and said flights from Adelaide to Sydney, Brisbane and Perth were all under consideration. It comes as the federal government's Tourism Aviation Network Support Program commences today, whereby 800,000 flights will be 50% paid for by the federal government in an effort to boost tourism. And non-bank financial lender Latitude Financial will attempt, for a third time, to list on the ASX. A prospectus lodged yesterday valued the company at $2.6 billion. The owners, which include a private equity group and Deutsche Bank, will keep 2/3 of the company. The valuation is considerably lower than the first time it tried to list back in 2018, when it was valued at $4 billion. It pulled its second attempt in October 2019 after not attracting enough support from overseas investors. But even at its lower value, it's still the biggest IPO this year. That's the Fear and Greed business headlines for today. Make sure you hit follow so you get it every morning. If you'd like more detail and more stories, search for our full Fear and Greed podcast. Today it also includes an interview with Chris Uhlmann from 9 News about the predicament the Prime Minister finds himself in. I'm Sean Aylmer. Have a great day.